Good day to you all. My name is Dr. Leon Perlman, head of the Digital Financial Services Observatory, part of CITI at Columbia Business School, and welcome again to one of our very popular DFSO webinar series. Today, our webinar is on an introduction to payment systems and faster payments. Our presenter is one of the world's foremost experts on payment systems, Dr. Brad Pragnell. He's currently in Canada. Welcome to Brad. So just some housekeeping notes quickly, please. Please switch off your microphone and video, please, at all times, because it does interfere with the presentation and other people's listening pleasure. Please don't ask questions via audio at any time. If you are going to ask questions, tee it up for the end and ask the questions in the chat box, which should be visible to you. Okay, today's agenda, it's a 1-hour webinar, about 50 minutes of presentation and 10 minutes of written Q&A. So again, tee up your questions in the chat box. Key concepts of key definitions, key processes, actors and roles, faster payments, and key issues for webinars. Just very quickly about the DFSO, we were established in 2016 through a grant from the Bill and Melinda Gates Foundation. That's our website, dfsobservatory.com. You'll see it's a pretty extensive website with a huge database, legal, regulatory, and a whole lot of publications. And indeed, if you want to look at any of our previous webinars, there are recordings of the webinars as well as our roundtables and annual summit. This is the team. There's Professor Ali Noam. That's me on the top right. Mike Wessler, who's the webinar tech. And Jason Buckfights, he's the executive director. Okay, so we do quite a lot of activities around the legal and policy side of DFS and payments and money laundering, RegTech. We've developed model laws and regulations, which you can download off the website under publications. A lot of commentaries and analyses of new laws and regulations. We have a lot of close collaboration with industry, regulators, academics, donors, standard-setting bodies around the world, as well as philanthropic organizations. So our webinar, Introduction to Payment Systems and Faster Payments. This is Brad's bio. Again, very fortunate to have Brad today. He's a good friend and collaborator of the DFSO. He's a principal at 34 South, 45 North Consulting, currently working with Payments Canada as part of their Payments Modernization Initiative, and Canada and Pakistan on the Gates Foundation-funded Micropayments Gateway Initiative. He was previously head of industry policy at the Australia's Payments Clearing Association. So as you can see, I won't go through all of that. A lot of qualifications, but happy to put you in contact with Brad if you wish. So Brad, over to you. The presentation rights are yours.
That's great. Thank you very much. I hope everyone can hear me. So thank you very much, Leon, for that introduction. And I would like to thank again the DFSO team at Columbia University for their support. They're doing some really great activities across the board, and I would highly recommend that you check out their website and participate in their activities. They're doing a lot of really interesting work. Just a little bit of personal housekeeping before we get started, that the views that I'm going to be expressing today in this webinar are personal views. They do not represent the views of any of my past or present employers or clients. So they're my views and not Payments Canada's or Carandat's or any other organization's views. I'm not really going to be in a position to answer specific questions around either Payments Canada's modernization project or around Pakistan, the Carandat's Pakistan Micropayments Gateway work. So I'm really not in a position to provide any specific answers or have it engage on those particular projects at this point in those projects. I am happy to talk a bit about my new payments platform background and to talk more generally around payments and faster payment implementation. So it's an area that I've developed a bit of an interest in over the past couple of years. I was fortunate enough to be involved with New Payments Platform from its inception, and as of February 2018, it is now a real live operating faster payment system processing around 400,000 transactions a day. So for those of you who are involved in these kinds of implementations and find some of this stuff a bit challenging, if you are involved in a real-time implementation, you're thinking you'll never see the light at the end of the tunnel, well, there is light at the end of the tunnel. So I think the demand for these kinds of implementations is growing significantly, and I think it's only a matter of time before we see more of this. So I'll start with the role of money. So I think for those of us who have done our economics or finance backgrounds, we always look at money as a starting point. So money is many different things. It's a store of value in terms of actually in storing economic value, it's a unit of measurement, and it's a medium of exchange. Again, this is sort of the dictionary definition of money, and it's really that medium of exchange where money is most relevant for payment systems. Payment systems are really about the exchange of value between economic parties, and at the end of the day, that's what they do. So I'm going to walk through, in a very basic sense, some of the building blocks around what payment systems are. And again, this is very introductory. So for those of you who are experienced, you might find some of this a bit stuff that you kind of already know. But it's really to try to just build up the story around understanding faster payment systems. So it's really about understanding who the actors are in these systems, how these systems operate. And without understanding how traditional payment systems operate, I think it's hard then to understand how faster payment systems work. I'm just trying to move here. There we go. Yes, I do have presentation rights. That's great. Why are payments and payment systems important? My background has broadly been financial services, and I entered the payment space in around 2008 when I joined the Australian Payments Clearing Association. I'd come from the pension fund industry, and funds management, which at the time was, pre-GFC, was seen as a very dynamic part of financial services. And going into payments, it's like, oh, you're going into the boring plumbing bit of financial services. Well, it's definitely not. It might still be the plumbing, but it's definitely not boring. I think over the past few years, payment systems have become more and more in the public domain, have much more profile, and I think there's a greater understanding of their importance in terms of really being that interface between financial services and technology. So I think that's where you're getting a lot of interest around payment systems, how they're structured, how they're governed, how they operate. So why are they important? Well, they connect economic actors. They allow individuals, companies, governments to be paid and to pay. Without payment systems, it'd be very difficult for us to pay. I mean, even cash at its heart is a payment system. Cash and checks are payment systems. Electronic, obviously, we move more and more into an electronic world over the past 30, 40 years. So they've become, in a sense, even more important, given the expectations that people have around things like speed, data, and certainty. They can create efficiencies, and they have network effects. So if you manage them properly, they can create economic efficiencies. They can actually create value within an economy. And if they're managed properly, they can remove friction, they can manage risk. And more importantly, and more recently, we've been seeing that payment system development can help foster innovation and promote financial inclusion. This is particularly important in developing markets. In developing markets, there's an understanding that, particularly with the advent of mobile phones, that we've seen this real flourishing of being able to have a more cheap and efficient way of trying to get people financially included. I mean, the most well-known has been M-Pesa in Kenya, which involves mobile phone payments, text-based mobile phone payments, and really that has sort of sparked this renaissance in terms of thinking about payment systems and their development and how they can impact an economy and how they can develop financial inclusion. And lastly, supporting monetary policy. Not a little bit of an afterthought, I guess, in this slide, but it's really important that central banks, and that's quite often why central banks play an important role. So I'll try to move through a few sort of definitions here. I'll try to pick up the pace a little bit. So first of all, what is a payment? So this is the definition from the Bank for International Settlements. It's a body that brings together central banks. And if you're looking for like the best source of information from a foundational perspective in terms of things like definitions, overviews, research papers, the Bank for International Settlements is always a good place to go to. They do some very, very good work, and I would always highly encourage people to use them as a source for information. So their definition of a payment and as a funds transfer is that the payer's transfer of a monetary claim on a party acceptable to the payee, typically claims that take the form of cash or deposit balances held at a financial institution or a central bank. So from their definition, again, it's about the transfer of value. So it's about value moving from my account to someone else's account. So for instance, me transferring $100 to Leon, for instance. So that's a payment at its very, very most basic form. So, and more often than not, payments in the way that I'm going to be talking about it involves changes to balances that are held at banks, at financial institutions. So moving on to the next slide, I'll just click here. So talk a little bit about the actors. And again, this is very simplified, very, done almost for illustrative purposes. So who are the main actors in a payment system? So if you look at the left-hand edge of the slide, you've got the payer or the end user. So that could be an individual, that could be a merchant, that could be a government, it could be basically any individual or entity. So they quite often, and this is really looking at in terms of sort of a simple credit push payment through a system. So I want to send Leon $100. I would then somehow be authenticated by my commercial bank, who would be a participant in the system. I would then authorize a payment, and then my bank would send a message through a payment system to Leon's bank. So Leon would have an account at his bank would be credited. So my account would be debited, his bank account balance would be credited. There would be an exchange of messages, there would be settlement that would occur at the central bank, and $100 would effectively leave my account, and $100 would be in Leon's account. So that, at its very simplest, is how a payment system works. So the payment system, as you see that sort of big ball at the middle, usually involves some combination of technology, rules, brand, that basically binds together these participants, these commercial banks. So in a sense, it's different than, say, a closed loop system where, say, Leon and I have PayPal accounts, right? You would still have an exchange of messages and there'd be an exchange of value, but you wouldn't necessarily see anything involving a system that sits between two separate parties, nor would you necessarily see anything involving a central bank. So this is how bank-based traditional payment systems work. So what are the role of the commercial banks in these payment systems? So commercial banks generally we're looking at entities that are regulated within their jurisdiction, right? And that the payment systems enable the value to be exchanged between the accounts of different banks. And quite often banks have played a very important role in terms of developing and maintaining these payment systems. So you go back to the 18th and 19th century, you've got the check clearing houses that originated in places like London and New York. So they are kind of the origins of modern payment systems. So I think the story you hear about how did the London check clearing system was created, that effectively the check couriers would gather together in this pub. I don't know if this is really the case, and then they would effectively net off the checks that were paid to different banks. And it was found that this was made to be more efficient, because if two different banks had the same amount of value being paid to each other, then they could just net it off, right? And these kinds of sort of bank-based organic systems that grew up into the modern payment systems that we have today. ACHs, or automated clearinghouses, and electronic funds transfer systems, and then eventually more recently into card schemes and faster payment type systems. But a lot of the basic precepts of traditional payment systems are based in those basic premise of check clearing. Central banks have also played a very important role within traditional payment systems. They support payment systems by issuing currency. In many jurisdictions, they'll operate payments infrastructure. Quite often, they'll operate systems, for instance, high-value systems, or more often than not, operated by central banks. They may provide banking services to government, and many jurisdictions, central banks have an oversight or regulatory role where they regulate payment systems or payment system participants. In most instances, central banks do not offer retail payment systems. So central banks would generally not offer a debit card or credit card scheme. They would generally not be involved in lower value retail type payments. There are some exceptions to that, but generally central banks have tended to be involved in more higher value systems where there are financial stability issues at stake. In some jurisdictions, there are other public regulators that may license payment systems. For instance, in the UK, with the payment system regulator, or they're involved in the protection of consumers. So quite often a financial services or competition regulator may be involved in regulating payment systems in this way. So what are the key activities of a payment system? So thinking back about that diagram that I showed before, there are sort of three main activities. First of all, there's exchange. And exchange is the exchange of a payment message between the participants and the banks. So when I go to my bank and I initiate a payment, usually what will happen will be that my bank will create a message, payment message. In more recent systems, it'll rely on a particular standard. It might be one of the ISO standards, for instance, an ISO 20022. So my bank would create a payment message in ISO 20022 credit transfer. It's called a PAX 008. And that payment message would then be sent across to the other bank. So that's the activity known as exchange. Clearing involves the reconciliation of transactions between the two parties. So by my bank sending that message to Leon's bank, right there creates a financial obligation. By accepting that message, there is a creation of a financial obligation that needs to be settled eventually. So clearing is the process of reconciling those obligations between those financial institutions. So how much does Leon's bank owe Brad's bank, right, will be sorted out in the clearing process. Settlement is the point where those obligations between those financial institutions are discharged. Settlement can be done in a lot of different ways. Deferred net settlement is where those obligations build up over the course of a day or over a period of time, and then they're settled at a later point. Real-time gross settlement systems that are quite common in high-value systems, the payments are settled on a transaction-by-transaction basis. So there's no build-up of credit risk between the parties. So when you think about payment systems, they generally involve a few different things. So they'll involve technology. So they'll involve some kind of physical connectivity between the parties. They will generally involve some kind of processing, so like some kind of switch capability. And that will generally be supported by rules. So rules that rest on the participants. So what kind of message am I supposed to send? What happens when something goes wrong? what are my obligations to the payment system operator? What are my obligations as a bank to other participants? Do I have to pay fees? What happens with returns? What happens with errors? So those things are normally dealt with in the rules of a payment system. And then some payment systems have a brand. This is probably a bit more common in card-based payment systems. So again, a Visa or a MasterCard operates as a payment system, but it also operates as a brand. It is something which has a commercial identity and something which is very well recognized by the general public. So I'll probably just go through this really briefly because I want to sort of get to the passive payment side of it. So I talked a little bit about rules and what they'll cover, governance, access, and those general payment system activities. As I said, the technology will involve a physical network in terms of, how do we actually connect physically? Is it internet-based? Are there leased lines? How are the messages switched between the parties? Is there some kind of, big mainframe that sits somewhere that actually switches those messages and makes sure that the message goes to the correct participant and so forth? And then things around clearing and settlement support, so on various interfaces and other tools. I've already mentioned a little bit about brand and pricing, so I don't want to spend too much time on that. I want to move on to faster a bit more quickly. So just in terms of thinking about types of payment systems, so our traditional payment systems are bulk or our check payment systems that are run by National Payment Association. For instance, in the United States, if you think about what NACHA does with the regional ACHs, for instance, quite often those involve much more of a rule and the technology. They don't have a really strong commercial brand. It might be a wholesale brand that's recognized by people who operate in the financial services industry or the payments industry, but it's not something that the ordinary user is necessarily going to recognize. It's different with card systems. Card and debit card systems usually have a strong brand, and that's because they generally will involve merchants and individual consumers, and that brand is part of what's their value proposition. Now I want to move on to fast payments. So this is kind of the guts of the presentation. So what fast payment systems do, and they're quite recent. So we've had a lot of different types of payment systems. We've had we've had cash and check. Back in the 70s and 80s, we started to have ACH, EFT. So the earliest forms of electronic payment started to emerge in certain markets. Then we had the emergence of card schemes. So the card schemes have been around for many, many years, but it was really in the 70s and 80s that the international card schemes started to take off. And those card schemes have evolved. They've moved away from embossed to magnetic stripe to now EMV chip and pin. You can use your credit card online. 20 years ago, you couldn't do that. Or it was very difficult to do that. So this whole system has evolved and changed quite a bit over the past 20 years. And a lot of that is due to technology. Fast payments are a new type of payment system. And in a sense, what makes them interesting and unique is that they combine elements of both traditional payment systems, your bulk and your ACH type systems, with card-based payment systems. The first, and we've had variations of that. Zengen back in the 1970s in Japan had sort of a version of this, but I think most people will see the origins of modern fast payment systems as really coming about with the creation of UK faster payments in 2008. So 11 years, and 11 years is maybe in technology seems like an eternity, but in payment systems, which have a tendency to require network effects and take a longer time, and the coordination of banks and big technology spend, it's a relatively short period of time. And what do fast payment systems do? They enable the immediate 24/7, 365 account-to-account payment between accounts. So as I'll talk about, it addresses some of the shortcomings of traditional payment systems and also some of the other features that credit card schemes have so it tries to, in a sense, combine the best of both of those. So I'll talk a little bit about how fast payment systems, and I'll provide a few examples of them as I work my way through. So what's wrong with what we currently have? And again, I know that payments is an amazingly rapidly developing field, and we're seeing mobile, we're seeing social, we're seeing distributed ledger technology and Bitcoin. We're seeing a lot of developments happening in this field. But for most of us, for most consumers, we still rely on traditional payment systems. We rely on cash, we rely on check, on bulk electronic. We also will rely on card schemes as well too. So, some of us, who are a little bit more, kind of electronically savvy, would be a little bit further down the road. But for most of us, we'll use some form of a traditional system. So the core traditional systems like check and bulk electronic have some pretty serious shortcomings. So first of all, they're based on old technology. So checks, as I mentioned, have been around for hundreds of years. And they have been subject to forms of modernization, for instance, the introduction of microlines, the introduction of check imaging, but a check is still a check. Similarly, bulk electronic systems that exist in a lot of jurisdictions, those systems have been around for decades. And again, they really were based on kind of mid-20th century technology. I love hearing, when I used to work at APCA so back in about 10 years ago when I first started, people were telling me stories about how they used to do the file exchanges in Australia back when the system was first started. And effectively, people from the banks would drive, they would meet in a car park, and they would supposedly exchange reel-to-reel tapes with each other. So that's how file exchange happened, many, many decades ago. So it was actually the physical exchange of those big reel-to-reel tapes. Obviously, the technology has advanced, but a lot of the ways the systems were designed was around the constraints of data storage and data transfer that, when those systems were created. When they were properly electronified, sort of going into the 90s, 80s, and 90s, we ended up having, we still operated on limited hours. We had limited data being carried with the payment, and quite often value would come slow, right? So under a bulk electronic payment, sure, I might be able to initiate that through my online banking with Leon. Say this is a few years ago, but he might not get value for till the next business day, or maybe a day after that. If I paid him over the weekend, he might not get value until Monday or Tuesday, and particularly problematic over long weekends. And similarly with data. So in a lot of these bulk electronic systems, these older bulk electronic systems, they might only be able to carry a limited amount of data. The free-form data you could carry might be 16 or 20 characters. So there wasn't an ability to carry a lot of extra data. So looking at fast payment systems that we've seen over the past 10 years, they are traditional in the sense that they're usually account-to-account payments, and those accounts are held at financial institutions. They operate on a 24/7, 365 basis, as opposed to just being working hours or avoiding weekends. And usually they will involve the immediate value to the recipient, often in less than 1 minute. So these are kind of the basic features of what these fast payment systems do. So how are they like traditional payment systems, and how are they different? So we'll go back to our diagrams here that we showed earlier on, this very simplistic model of how a payment system operates with the actors. So payer, payee, commercial bank, payment system, central bank, and then government regulator. So if you look at a traditional payment system, quite often the processing in the middle would be batch-based, and it would be based on limited hours. So the transactions would be batched up, and the processing might only happen, say, during weekdays or particular periods of time. Similarly, the settlement. Quite often, the settlement might be at the end of the day or the next business day, and similarly, settlement would happen only during banking hours or during and not during weekends. And the value to the end customer quite often would not be until the next day or the next banking day, or it might even be a bit later in that if you're looking at check payments. But if you're looking at a bulk electronic payment, quite often that value wouldn't be there until the next day. So what fast payment systems do is that they keep this basic architecture of a payment system with payer, payee, commercial bank, central bank, and a system in the middle, but they change how it's actually, some of the design choices are different. So first of all, you see individual processing. So transactions are processed on an individual basis. They're not batched up, right? So my transaction that is sent through from my bank to Leon's bank is processed as an individual transaction. It is done on a 24/7, 365 basis. And similarly, settlement happens on a continuous basis as well, too. There might be multiple same-day settlements, or there might be real-time settlement, depending on how the system is designed. And ideally, Leon would get value immediately. So Leon would have his value ideally within 1 minute. It might even be within a couple of seconds. He can go to his ATM and he can take that $100 out. And if it's supported by real-time settlement, then those are cleared funds. They're cleared and settled funds. There's no credit risk in the system. So that's sort of how they're designed, to try to keep some of the basic features of these traditional systems, but to try to enhance them in terms of how they actually function. So a little bit about some of the other features of how faster payment systems are done. So first of all, around the messages. So quite often traditional payment systems have relied on proprietary messages. So these are message sets that were developed by local banks and might often be just based on what worked for them at the time. They might have relied on some global standards, but sometimes they didn't. Fast payment systems that we're seeing now, the ones that have been introduced over the past 10 years, are increasingly relying on ISO 20022, which has the benefit of providing additional data that can be carried with the message or alongside the payment message, or ISO 8583, and that is the data standard that is used by the international card schemes. So some first generation fast payment systems like UK Faster Payments relies on ISO 8583, whereas newer implementations like Australia's new payments platform, which started last year, relies on ISO 20022. Just briefly around the services that these systems offer. So one thing that traditional payment systems don't do is they don't necessarily define the service layer, use cases of the channel. They leave that to the bank. So I will run a bulk electronic clearing system, or I'll run a check system for you as a payment system, but I'm not really concerned about how you provide that to the end users. One of the lessons coming out of UK Faster Payments was that it was offered as a system, but it wasn't really clear to banks or consumers, well, what are you actually going to use this for, right? So that informed a lot of the thinking in other fast payment systems. For instance, Australia, where I was quite involved with, and we said, well, you need this services layer. You need a layer, what we called overlays. You need these services that sit on top that have a clear value proposition. They address proper use cases and they have some kind of commercial footing. So in Australia, you've got the new payments platform, which provides the infrastructure, and you've got an overlay service that sits on top of it called OSCO that provides for P2P capability. So you've got the system basically making sure that everything runs properly, but then you've got a services layer that it's clear, well, this is the value prop for the end users. Move to the next slide here. So some fast, and I'll try to get through these briefly, addressing. So some fast payment systems have an addressing service. So one of the other problems of traditional electronic payment systems like bulk systems was that you usually had to enter some kind of routing number of the institution and an account number. So there was always problems in terms of misdirected payments or mistaken payments. And, you know, there's a security issue there about, well, should Leon have to give me his bank account details? Is it a good customer experience that Leon gives me the routing number and his bank account number so I can effect a payment to him? Or is it easier if he just gives me his mobile number or his email address? So some of these fast payment systems have an alias database, which effectively is run by the payment system, which would have aliases that are registered. So there would be email addresses or mobile phone numbers, and those would be linked to a bank account. There might be tokenization there, and there's lots of different ways you can design that. But the main basis or premises of that is that I would be able to make a payment to Leon only by knowing his email address or his mobile phone number. I don't need to know where he banks, and I don't need to know his account number. One of the features of faster payment systems is quite often they'll have a transaction limit. So they will cap the dollar amount that you're allowed to send. And quite often this is done for fraud and risk management purposes. It's because these payments are very fast. And traditional payment systems have relied on those delays in processing to give the fraud and risk people or the systems time to interrogate payments and to make sure that fraudulent or inappropriate payments are not necessarily made. That's a lot harder in a faster payment system to do. It's a more technological of a challenge. So capping how much you can send through that system is quite often is a feature to do that. Most of the fast payment systems are single currency and domestically based. We're increasingly seeing there's obviously cross-border implementations in places like Europe with SEPA INST, and we're seeing some experimentations happening in various jurisdictions, but most of the fast payment implementations that we've seen over the past 10 years have been domestically focused and single currency, and I'll kind of walk through those a little. So what about the existing or emerging alternatives to fast payment systems? So if you think about fast payment systems have emerged over the past 10 years, we've seen a lot of other things that are also challenging traditional ways of making payments. So obviously credit cards are the most commonly way, and they have proven well suited for the digital environment. So for a lot of us, being able to pay with our credit card or being able to pay with a service like PayPal, where we might link that with our credit card account, allows us to operate in a digital environment, allows e-commerce to flourish, and is something that has been adapted for that environment. But it does have some shortcomings. So one of the challenges with credit card systems is that there are interchange fees, and quite often, and I don't want to get too much into the detail of it, and there's significant cost to merchants. They're not necessarily cheap to merchants in terms of accepting credit cards. And that's why some smaller merchants and certain types of merchants are not huge fans of having to accept credit cards. Credit cards have problems with fraud and with chargebacks to merchants as well too. So card not present fraud is a problem in some jurisdictions. So a person using someone else's credit card number and card details to purchase goods. The card schemes have rules in place to ensure that me as a card holder, that I'm going to be made whole in terms of being subject to that fraud. My issuer would more often than not make good on that, but that does mean that there are chargebacks to the merchant. So the merchant sometimes will somehow have to pick up that cost, and sometimes if they have sent goods, it's very difficult for the merchant to get that money back. One of the advantages of credit cards as well is that there's a control by the payer as opposed to the card details having to be kept having card on file. So a lot of e-commerce transactions that involve credit cards involve card on file. So you provide your card details to the e-commerce merchant, and then that data will be stored somewhere. It might be stored by a third party on their behalf, but that data will be stored. If that data is breached, then yeah, those card details are available, and then that makes it easier for fraudsters. And fraudsters quite often will try to target those kinds of data stores to try to get that information. The other thing about credit cards as opposed to fast payment systems is that they generally rely on ISO 8583. The ability to carry remittance data is quite limited in that, so additional data is hard to carry with that. ISO 8583 is very good at dealing with retail payments, merchant payments, but it's not as good and not as adaptable per se into things like, say, B2B payments or other types of payments that might require further information. Other types of non-bank-based alternatives to faster payments are obviously mobile network operators. We saw a real emergence of that a few years ago. I think in developed markets, it really hasn't taken hold, but they're still very strong in developing markets. So for instance, your M-Pesas in places like Kenya, like I say, working in Pakistan, looking at initiatives like Easy Pesa and Jazz Cash. You've seen, really strong take-up of quite often, they could be closed-looped mobile network operator systems that are offered, but they seem to have more success in developing markets than in developed markets. And again, we're getting around some of the closed-loop problems with interoperability and so forth. Payment system providers, again, I've mentioned organizations obviously like PayPal, but we've seen this real strong take-up of fintechs over the past recent years. And looking at DLT, so distributed ledger technology, Bitcoin, it's probably the most well-known brand. You go back 4 or 5 years ago, and there was this real kind of view that distributed ledger technology was going to just completely wipe out traditional payment systems. I think we're a little bit wiser now in 2019, and I think we realize that there's still a way to go in terms of digital distributed ledger technology actually supplanting traditional payment systems. It's still, I think there's a lot of really interesting design features there around how they're structured and how they operate, but in terms of being ready for prime time, there's still a way to go. Okay, so just briefly around, just a little bit of a summary around, well, where are we seeing these fast payment implementations? So there's a very good report that FIS releases every year called The Flavors of Fast, and I would recommend that. I think it's a good report, and they do a bit of a around the world survey of the various types of fast payment systems. So as you see from this map here, we're seeing real-time implementations in both developed and developing markets. They have a tendency to be national implementations, though we are seeing some more regional implementations in places like Europe. So just briefly walking through some of them. So UK Faster Payments, as I mentioned, was originated in 2008 with 29 institutions now. They've widened access in recent years, so they have a number of non-traditional players, entities like TransferWise and so forth, that are now participating in their system. And there's been some changes to their governance as well. So previously, it was run by the UK, by the Faster Payment Scheme, but a new entity called Pay UK has been created, which actually operates the system. And VocalLink, which is now owned by MasterCard, provides the technology for that. But very briefly through the details, it's based, as I mentioned, on 8583. They have a limit, a transaction limit of £250,000. They're continuing to review that. It is a single credit transfer with no debit capability. They are looking at request to pay. So request to pay and won't probably have much time maybe in the questions to explain what request to pay is. It is a feature in some faster payment systems that has sort of debit-like features. So it involves the payee sending a message back to the payer saying, "Hey, you owe me $100." So request to pay in its simplest terms would be Leon sending me a message saying, "Hey, Brad, you owe me $100," and then me responding to that. So it doesn't currently operate in UK faster payments, but it does operate in a few other systems. IMPS in India has actually turned into quite an amazing success story in recent years. So it was started up in 2010 with over 200 plus participants now. The UPI, the Unified Payments Interface, which allows multiple overlays, has really been the thing that has just rocketed up IMPS in terms of being a really increasingly widely used system. So I think we're going to see a lot coming out of there, and the whole India stack development is actually really interesting. Sweden has BIR, so Bank Giro operates a fast payment system that supports Swish. It is a B2B service, very well used in Sweden, and now being used for merchant and business payment options. Singapore, PASS was launched in 2014 with 20 participants. It has a 50,000 Singaporean dollar limit. It has both credit transfers and debits. And very recently, they have introduced a service, an addressing service that makes it easier for people to pay by both mobile and other identifiers. And then lastly, one closest to my heart, Australia New Payments Platform was launched last year with 13 participants. I believe 14th just joined recently. Single credit transfers and a P2P overlay. It has an addressing service and ISO 20022 with request to pay. Again, coming soon. In the States, we've seen a lot of developments with the clearinghouse introducing its real-time payment system and early warning services Zelle service and a number of card-based schemes. The U.S. Federal Reserve is currently consulting on whether or not it should offer real-time capability. So there's a lot of developments happening in here, and NACHA just released a faster payments playbook, which looks really interesting. So there's a lot of stuff happening in the States, but it is a very big market and probably a little bit more fragmented than some other national jurisdictions.
3 minutes.
We've had INST, which was introduced about a year or so ago, or actually November 2017. But it's more a set of rules and infrastructure. But so we are seeing that cross-border as well. In all of these systems in the UK, India, Sweden, and Australia, we're seeing significant take-up. So we are seeing significant growth in these systems. And we're only going to see more and more real-time systems taking off. I'm just trying to get into the final slides here. So there are a lot of challenges for faster payment systems. They're operating in a crowded market. Industry collaboration is really tough. And there is a need to develop the business case. Achieving ubiquity and interoperability is always tough. Elixir Express in Poland, which is a well-designed system, struggled for many years because not all of the banks participated. So what are the implications for central banks and national payment associations? Central banks often have a very important role in faster payment systems. They may be the regulator, they may be a participant, or they may actually operate the system. Again, national banking and payment associations similarly can play a very important coordination and facilitation role. And doing a faster payment system is part of an overall approach to how you enhance your ecosystem is a great way to think about it. Just briefly, I won't spend too much time here, but for those of you in developing markets who are looking at faster payment systems, I think that the Gates Foundation Level 1 principles are always a good way to look at it. They're looking at it from an open loop as opposed to a closed loop perspective. So really about making sure there is a number of participants, and it's not just about a single entity running the whole thing. It's really about getting central banks, wide number of participants, and trying to create a system which is flexible and open as much as possible. And there's no one best way. There's a lot of design choices here, and it's really, you're really going to have to work hard in your own jurisdiction to get the right choices for participants and end user needs. There's a lot of good material out there, the level 1 principles, flavors of FAST, and material from the BIS. So I would highly recommend you read any of that material out there. And yeah, look, places like Columbia, DFSO, again, good source of information on this. I think I'm basically at the end now. I think we wanted to leave about 10 minutes for Q&A, so I'm just going to wrap it up there. Thank you.
Thank you, Brad. That was great. Pretty comprehensive. And for those who've joined late, I'm Leon Perlman, head of the DFSO in New York City. And we're inviting questions via text, not audio. And during the course of Brad's presentation, we've got a few questions. One from Layana. What are the exact added values introducing ISO 2022 in fast payments compared to ISO 8583?
Oh, great question. So the main benefit of ISO 20022 over 8583 is really around data. So ISO 20022 is XML based, and it is very much allows for a greater amount of data to travel with the payment. There's been a lot of really good work done through the ISO 20022 Real-Time Payments Group, RTPG, and they've defined message sets and sort of principles around usage guidelines. And I think if you're looking at a faster payment system that supports more than just P2P, then I would think you would definitely want to look at ISO 20022 over 8583.
Okay, thank you. From Attila, can you touch on whether or not the U.S. Fed will introduce their own RTGS system in the U.S.? I think
yeah. Okay, so the U.S. Fed already, so at the moment in the United States, you have, for high value systems, you've got FedWire that is offered by the Fed, and then you have CHIPS, which is offered by the clearinghouse. So currently, for real-time, for these lower value real-time payments, the clearinghouse introduced its real-time payments, RTP, about a year or so ago. And the U.S. Fed has been looking at whether or not it should introduce its own system. Look, I think that's still up for debate. I think that the clearinghouse has made some recent announcements around access and pricing and governance of its real-time service that I think addresses some of the concerns that maybe the Fed, some smaller participants and some larger technology companies had around their service. So, look, I think there's a possibility that the Fed might offer something, but I think that TCH is doing its best to try to accommodate concerns around access and pricing and so forth. So we'll see where that goes.
Okay, question from Simon in Nairobi, Kenya. Could you speak about the use of distributed ledger technologies in faster payments? Are the current technologies fast enough for faster payments?
I would say no. There was a bit of work done around, well, how many transactions per second can distributed ledger technology support? And look, I mean, you can find a lot of information on the internet, some of which looks credible, some of which is made up. But if you look at the level 1 principles that the Gates Foundation published, they released some requirements, and I think they have a benchmark of somewhere around 800 or 1,000 transactions per second. Distributed ledger technology is not really, for the most part, not really at that level. You know, the way in which they're constructed makes it very difficult for them to process at that speed. So I know that there's been a lot of experimentation to try to deal with that, but again, until distributed ledger technology can get over the speed issue, and to ramp up its transactions per second, it's going to be hard to see them as fully supporting fast payment systems. But I think they've got some interesting features that anyone designing a fast payment system should look at.
just on that, close to home for you is Project Jasper in Canada, the central bank, and they, I believe, were using the R3 Corda system as well as a Ethereum blockchain. And is there any update on that?
Look, I think I know our Payments Canada Summit next year, usually, or next week, usually there's an update on Jasper. I know that that both the Bank of Canada and the Monetary Authority of Singapore were looking at cross-border DLT payments, and there's been some material published on that. So if you're interested in that, I think it's available on both the Bank of Canada and the Monetary Authority of Singapore websites. There's some reports on that. Yeah, I mean, there's been various iterations of Jasper, and I think, again, I'm sure there'll be some kind of update next week at the summit. I can't guarantee that, but yeah, it's definitely, I think part of what Payments Canada, Bank of Canada, and I have been looking at is you really need to play with these technologies to really understand them. You really need to spend time with them to understand what they're good at and what they're not good at. I think that's the real value of the Jasper, is that they've been experimenting themselves and have really got their hands dirty and figured out, well, what they're good at and what they're not as good at. Hello? You still there? Hello?
Sorry about that. One last question from Sachin in New Delhi. What is the cost? This is a very broad question, but what is the cost of implementing a faster payment solution, and is it affordable for developing countries?
Look, that's an excellent question. I think when these systems were first introduced, they proved to be very, very expensive. If you look at new payments platform, the total cost, this is both the center cost and the cost of the banks, was put at about $1 billion. So very expensive from that perspective. I think a lot of those costs have come down in recent years. You're seeing a much more vibrant and competitive marketplace in terms of potential solution providers out there. So I think that those kind of prohibitive costs that you would have seen thrown around even a few years ago, I think they've come down dramatically. So, you know, it's moving out of the hundreds of millions and probably starting to head a bit south of that. I wouldn't want to start putting specific numbers around it, but I think where the technology is now, I think that it is becoming more and more affordable for developing markets to implement these things. A lot better than it was even a couple of years ago.
Okay. Brett, thank you so much. We're right on the hour, so good timing for the presentation and the questions. Thank you so much. Again, the presentation will be available on our website as a video of this webinar sometime next week. So please go to dfsobservatory.com and look out for it. And we'll also be sending you an indication of when our next June webinar is. So look out for that as well, please. So to you all, and especially to Brad in Canada, thank you very much for your attention and the presentation. And this is a goodbye from New York City. Bye-bye, everybody. Have a good day wherever you are.
Thank you very much, Leon. Thanks, everyone. And people can feel free to connect with me on LinkedIn and DM me if you've got any follow-up questions as well. Thanks.
Great. Thanks, Brad.
Thank you.